Wall Street working overtime last night because today an abundanza of analyst calls hitting the tape. And we have found the 5 most interesting. We are calling it what else? Our Fast 5. So you guys ready? It's going to be fast. All right, let's kick it off with Tesla. Now, you had 2 downgrades today. R.W. Baird cutting its rating in neutral, while CFRA says sell the stock. Of course, Tesla was flirting with $500 in early trade before backing off. Guy Adami, those 2 calls, bold,
yet I think one of them changed their price target from 325 to 525. So you can downgrade it all you want. They still see upside in the share. So again, I've been pretty outspoken about my erroneous ways now for the last month and a half in this name. But now at least you're starting to see analysts potentially, well, I shouldn't say it, but come to their senses and maybe taking some money off the table in the name.
Well, it's interesting that valuation seems to be coming into play here. That's my cynical comment, but you expected that from me on Tesla, where I've also been wrong.
We'll get Oswald back on the phone. All right, stock number 2, AMD. Now, AMD going the other way, getting an upgrade to a buy at Mizuho. The analyst upping his price target by $17 to $55 a share. Karen, what do you make of it?
Well, I understand why they did it. They think, that some of the pricing pressure from Intel are behind them. They think that market share gains are in front of them. We've seen a turn in the space. All that's good. I just wonder, they were at neutral in 38 when the stock was a lot lower, and now 55 with the stock, 48 where it closed today, I guess. I'm wondering, it's either a really bold call or the horses left the barn already.
It's up 70% in 90 days.
I know. So that I probably wouldn't make that call.
When people reach for growth, they still go to these names. So they're finding growth in the same names that they found growth in before. They can't switch it up. So it's almost on automatic pilot. Whenever you have the smoke clear, whether it's the Iran issue or whether it's any other geopolitical, they go back into what's
well, you wonder, is there too many people buying the same stocks? I know we've talked about it all the time, but it's like,
well, they're crowded trades.
It's it. Semiconductors and FANG, and that's it.
Well, I think in AMD's case, it's been a phenomenal run, but I think you're bringing on the heartache because ultimately you've got a dynamic here where valuation doesn't make sense. I know it's not the valuation show anymore, but.
All right, stock number 3, Starbucks. Barclays upgrading the stock to an overweight. Analyst likes the company's global growth. Starbucks is now back above $90 a share, Steve Grasso. But is it worth any new money considering it's below where it was a year ago, 6 months ago?
This is a stock that always figures out how to survive, but I don't like that they're pushing more into digital because I like getting into the store and ordering, waiting on the line, picking up those second, third, fourth other items online, that stupid coffee mug that you don't need. I don't like the whole idea of either delivery or your order's waiting for you in the end, and it seems that's what.
But digital's driving so much revenue for them. I mean,
it is, but I think ultimately, longer term, they're getting people that they wouldn't ordinarily get. But when the people that ordinarily buy from them start using digital versus going to the stores, I think they buy less.
You wonder, and I know it's a little bit off topic, Guy, but I know there's people you see on Twitter or whatever that are like, they don't like the app because if you go into the store, you're second in line and 45 people come in ahead of you to pick up their cups. And you know what you do? You leave. And the people who pick up their cups, they don't buy anything else.
Right.
They don't get that 600-calorie scone. You know what I'm saying?
Why'd you tap him in the belly?
That wasn't. I didn't feel good about that. It was funny.
Maybe they need to clean that part up. But again, it's the valuation show. So real quick, this stock's trading close to 28 times next year's numbers on maybe 11% EPS growth. That's a little frothy.
Oh, nicely done there.
But by the way, the wholesale cost of coffee has come up about 25% in the last couple of weeks. Just something else to watch. I like that, and I see what you did there with the Def Leppard. All right, stock number 4, CocaCola getting an outperform rating at Credit Suisse. The analyst sees revenue growth. Tim, speeding up.
Well, I tell you what, this has been a rocket, and if you think about it, it's also a Def Leppard song, but it's also the case where Coca-Cola, which we've been left for dead, is actually, when you're talking about 4% same or comp growth for a company that did nothing for a long time, it's actually kind of interesting. But when you think about how Coca-Cola has slowly expanded well beyond the carbonated soft drink CSD space, it's a global brand. It's an iconic brand. In fact, I think it should trade at a major premium. I'm long the stock. I think you stay there.
Anybody else around the table long Coca-Cola?
No, not for years.
Why not?
I don't know. It just always seemed expensive, and then there was, pressure on carbonated beverages.
Not too late for love.
Well, it's never too late for love.
You're not fooling. Anybody else? No?
Not there.
Okay. Finally, rounding out our Fast 5, and that is Shake Shack. The Shack, Raymond James initiating coverage with an underperform. The analyst says the street is, quote, overly optimistic on the stock heading into this year and next. Steve Grasso, your take?
Well, I'm long the stock. I bought it off this dip, the most recent dip, and I think this call is late. Stock's down from $105. They grow quicker and they have better margins than the rest of the quick serve restaurant space. I'm there. It seems like it's stabilized around this level. I think it's ripe for a pop. I think Ray J's late.
Yeah, quick. I'm with Steve on this one. I mean, this was at $40 to 110. Basically, this move is a 50% retracement, give or take. I mean, I think they're late as well. So I think if you're selling it here, you might be trading it wrong. I understand valuation, the show about valuations. This is a ridiculous one, but I think the move downward in the stock reflects that already.
Valuation matter on a name that is growing more quickly than most of its peers?
If they miss, valuation matter. If the E comes in and the PE contracts.
And I think that's what you got. They didn't show enough growth the last quarter, and you got massively corrected. But I'm with these guys. I think after this pullback, this is a stock we have been giving the benefit of the doubt in terms of the high multiple, and I think it's back to a place where you've priced that in.
And listen, the stock fell a little bit today, but on that kind of call, the analyst wasn't successful, could not Armageddon it.